Yo, the stock market is in trouble. Let's check the charts out and let's see what's going on. Let's check out the S&P. S&P closed at 4,057.66 cents. And man, the market want to stick me for my paper. The market moved lower. And let's check this out here. Last week, I mentioned that I was anticipating for the price to continue to remain in between the 50-day and the 20-day moving average and stay pretty close to that 4,300 area. Well, 4,300 area it's a little bit further in the distance than what I was anticipating. It is actually near the 20-day moving average. Now, here's two things that can happen from here. One, the 20-day average, moving average, could actually form a support and give some type of bounce to the price. Or two, the momentum from the resistance continues to move lower and we end up testing near the lows, ultimately near the lows. Next week, I think that we end up getting towards this 4,000 area and we'll see what can happen from there. But right now, it does not look good because if you recall back from weeks ago, I said the level that the bulls need to clear was around that 4,300 area. And if they did not, we would likely test out the old lows. And right now we look like we are in the pattern to do that. So that is it for the S&P. Let's check out IWM. And we use ticker IWM. If I can get my typing right. All right, IWM closed at 188.98. And let's check out the price action. All right, and similar action here. We got to that 200-day target. That 200 target. And I was looking for it to stay within this range. And technically we are a little bit in there because if you can see back here, this wick is showing that we can still play ball in between this area. There is a minimal chance of things rebounding only because price action kind of got broke when we had lower high, lower high, lower high. Here was the lower high, and all of a sudden now we have a higher high. Now, I'm not going to say anything as far as how this is going to act because I think that we're ultimately going to probably retest 170, but we'll see. Price action right now is just showing me that it is still very confused. We are pinned in between this 50-day and 20-day moving average here as well. So we're just going to sit this one out and we're going to look to see if we can finally get above 200. If we do, then the market can finally regain that traction. But right now, it's not looking good. That is IWM. And let's check out the Dow, and when you use ticker $, let's try that again. $DJI. My hands are slipping off the keys. There we go. We closed at $32,283.40. And let's look at what we got here. And this is the ugly one. Oof. That ain't pretty at all. So last week I was looking at this doji here as a very good signal because it could be a sign of continuation. That always is going to depend on the next candle, as I pointed out before. That next candle, however, was a huge red candle, and man, that does not look good. This here, ladies and gentlemen, is called an evening star pattern. If you want to learn more about that, make sure you go to my website. I have all the documentation to show you exactly what this is. The evening star pattern is a bearish formation, and this also will depend on the following candle to give confirmation. Confirmation is the biggest thing in the world that's going to help you understand technical analysis and give you confidence in what is going on. So this is also showing that a move lower is likely going to happen, and we're going to probably retest around that 32,000 area. We'll see what happens from there. That's the Dow. And lastly, let's check out the Nasdaq, and we use ticker NDX. The Nasdaq closed at 12,605 and 16 or 17 cents if you want to round up. And the price action on that is showing pretty much the same thing as the other indexes, where we are in trouble. we're in trouble because we were supposed to be able to get up and we did not. Now, this might test around the 12,500 area is what I'm looking at. If that can hold, then that can be the next good signal for the market. Now, let's recap. All four indexes show signs of trouble. They failed to get above critical levels in order for the bulls to keep that traction going. The only thing going on that can potentially save the market right now is that the lower highs have been broken. And what I mean by that is that there was a series of them going, and recently we made a higher high versus what happened before. Now that pattern may pick up some steam and help the market, in addition to the 20-day moving average being some type of support. If this does happen, then we can put back on the table a bullish move. But right now, it does not look like that is going to be the case. Confirmation will come, and that is what we need. So make sure you take care of yourself, and if you like what you heard, make sure you hit that subscribe button, give me a thumbs up, and leave me a comment. And also, I do this every week. Check the series out. The series will tell you how to read a chart every single week. So when you hit that follow button, you'll get a nice little notification when this video jumps off, and it tells you every single week in simple terms. This is what you're looking at. Mark it up, mark it down, what to look for. All right. I enjoy your time. Thank you for sharing it with me. Share with other people, and always take care of yourself. Spend time with family and friends, and love yourself. All right. We're out of here. Peace.